Welcome to Finance at the Jobsite, the podcast where construction finance meets the field. I'm your host, Rishi Srivastava, founder of Being Human. In each episode, I sit down with construction CFOs, controllers, owners, project managers, IT leaders, ERP consultants, and industry experts to uncover how they connect the back office with the field, choose and implement technology, manage cash flow, and drive profitable projects. Whether you are running the numbers, leading the team, or designing the systems that keep projects moving, this is your place to learn what's working, what's broken, and what's next in construction finance. Today, our guest is Jacob Studer from Travelers. Jacob, welcome.
Thank you, Rishi.
First section here is on your field experience to underwriting insight. You started your career actually in the field, framing, electrical work, even running your own small contracting businesses. How does that hands on construction background influence the way you underwrite today?
So I've always thought it just affects maybe my perspective. I think you've talked to a couple of surety people already. Most people in this industry have like a finance or an accounting background, which is very valuable in its own right. But I've just always felt like my perspective is a little different. I appreciate the financial statement. It's extremely important, to evaluate the health of the company, right? But I felt like I can have a little bit more of a holistic view and actually a stronger understanding of the other aspects of the business beyond just the financial statement.
Yeah. Actually, understanding your end customer's real business matters.
Yeah. I've always been glad because when we get bond requests, they'll send over the contract, sometimes the plan sheets. And I've always thought, man, if I didn't have the background I had, at least for me, the way I learn, I would feel lost trying to look through even just high level and understand a project. So it's always helped in that regard.
For contractors listening, what is the single most important thing your surety underwriter wants to see? And why does it matter so much?
So I thought this was a good question that you put together. And when I thought about it, there's three things that came to my mind. And the first one is just character. If you're a terrible person, I'm sorry, I don't want to bond you. And that's its own discussion, right? So just be a good person, be a moral person. That's the number one, like just non-negotiable. And then, the other two I thought of are operating margin and cash flow. Because we'll talk about this a little more later, but not every contractor has a perfect balance sheet. But there's ways to work around that and to support and bond a contractor like that. And the key is positive cash flow and operating margin, because those if you have a contractor that has strong operating cash flow and a strong operating margin, then that can make them fairly bulletproof. So those are really important to me. And if those aren't there, even if you do have a strong profit center and you're a profitable contractor, if you don't have cash flow, though, it's going to be a problem. And as maybe some people have already talked about, we have contractors out there right now that are starving and struggling. And it's not because they're not profitable. It's just because the cash flow isn't there.
It's a tough industry, It takes like 60 to 90 days to get paid if you are a contractor.
Yeah, especially further down the chain you get. I mean, I really feel bad for the guys that are, a third or a fourth tier. I mean, you get that far down and the general's got to get paid by the owner, the first tier from the general. I mean, you get that far down and some of those guys are waiting so long to get paid that's tough. That's really tough.
Yeah. Yeah. The next section is on surety underwriting fundamentals. When you look at a contractor for the first time, what tells you this is a company we can grow with?
So I think there's a few things that stick out. One is, I want them to be following a disciplined business plan, and have like a strategic growth plan. And those sound like buzzwords when you hear like business plan, growth plan.
Mhm.
But what I've seen and what we've seen is it really does make a difference. The people that have written and defined, here's where we are, here's where we want to be, here's how we're going to get there. And I mean, that really makes a difference. And the most successful contractors I've worked with, that's how they operate. Because that helps you determine not only what you are going to do, but it helps you determine what you're not going to do. And the contractors that I've seen that are the most profitable and successful, both of those are important. They know what they're good at, and they also know what they're going to say no to and turn down, because they know that, for some people, the project you turn down is the best project you ever take, just by not taking it. So just someone who's following a well thought out strategic growth and business plan. Retention of earnings is a big one, because we've talked about construction is tough, especially on cash flow, and growth just eats cash. I mean, if you're going to grow, you have to have cash. There's no way around it. And so if someone comes to us and they say, hey, we want to grow, and then I look back, at their last, let's say, 3 years of operations, and I see all the earnings being stripped out every year, it's harder. And it doesn't mean we can't do it, but it's like, hey, let's have a conversation. If this is really what you want to do, you've got to commit to reinvesting some of those earnings and having discipline in that way. And then just, I think those other two things we talked about, just the cash flow and the margin, that's going to be really key. And if those few things are there and are in place for a contractor, then I think there's a lot of potential.
Yeah. Not taking some of these bad projects is so important. Somebody asked Buddha what enlightenment is, and Buddha responded in negative. It's called via negativa. It's so important not to do things.
Yeah. Well, so one thing that's interesting is, I work for Travelers. We're the biggest surety in the country. So we have a lot of contractor clients, and one of the cool things about that is we have a lot of data. The construction industry is highly privatized. There's a small segment that are publicly traded, but other than that, it's hard to get data, right? Because they're all just privately held. But being as large as we are, that's one of the interesting things is we can see a lot of information that most people don't see. And so one of the things we've done with that is we've actually done studies. We've looked through historically at our losses. And what's super interesting, Rishi, is over half of our contractors who ended up in claims on bonded projects, the ultimate problem was just one really, really bad project. And that's part of why me and maybe other surety underwriters will say things like that is it might be like, hey, it's just one project, but we have a lot of data that shows that one singular project can go bad enough that your company ends up out of business. And that's why that's why I say, hey, it's just as important to turn down the wrong job as it is to take the right job.
Can you break down the difference between surety underwriting, insurance underwriting, and mortgage lending? What makes surety its own discipline?
Yeah, so I always tell people, it's a very niche industry. I work in surety, so I usually don't tell people I work in surety. I just say I'm an underwriter, and I kind of
Mhm.
just leave it at that. And if they push any further, like, oh, do you do mortgages? Do you do insurance? I'm like, no. And I personally, I would really struggle in those fields. And really, the difference is, any of us that have bought a home, like, have experienced mortgage underwriting, right? It's very much a check the box approach. It's, hey, ask them this question, ask them this question. If it's yes, checks the box. If it's no, you don't get to check the box, and they don't get the loan, or they don't get the one they want. And insurance is similar, right? So insurance rates are made by actuaries, and those rates are set up so that they're charging enough that they can pay for losses based on, that assumed or estimated loss ratio. And then they can pay their overhead, and then the insurance company can make a little money afterward. And it's a very, here's your insurance application, answer these questions. That's going to determine the rate. That's going to determine if we write you or not. And the underwriters don't have a lot of autonomy. And that's where I think we're different, and it's a lot more fun for us, is we have a lot of autonomy as surety underwriters to operate in the gray, where you've got a situation that's not black and white, and it could kind of go either way. We have the opportunity to look at it from all perspectives, and there's not necessarily a right or a wrong answer. And we just get to make a judgment call. And that's what I think is fun for us as the underwriters. And that's where I think as the contractor, it's really important for you to be really thoughtful in your approach with your surety relationship, because you really can get more out of it, because not everything we do is based on a ratio or just a question that's a yes or a no. There's a lot of judgment and estimation that goes on that can't be quantified.
AI cannot be a surety underwriter.
Thankfully, no, at least until that thing starts thinking for itself, which we'll probably have other problems if that happens. But yeah, I would say we're fairly safe because yeah, it's not a job that can just be yes or no. So yeah, we have at least a little bit of protection for now.
What trends are you seeing right now in the surety market? Capacity rates, claims activity, or underwriting philosophy?
So the surety industry, and this is similar to construction as a whole, it can be very up and down. And so we've had stretches of time over the last 50, 60 years where surety results have been amazing. And then there's times it's been an absolute bloodbath and companies are trying to leave the market. And just like the market in general, the last 10 years or so, surety has been really, really good. Construction's been doing amazing. And so surety's been doing amazing. And so with that, we've had carriers who weren't in the surety space who were just doing insurance, and they're like, "Hey, that looks pretty good. We want to get in on that." So you've got carriers entering the market who weren't here before, and then all the existing carriers, they say, "Hey, we want more market share than we've historically had." So with that, there's been just a lot of very aggressive behavior. Capacity is definitely at an all-time high because that's just one way that some sureties are trying to compete is they're saying, hey, if he'll give you 30 million, I'll give you 50 million. And sometimes that makes sense. And sometimes I would consider it very, very aggressive and almost, speculative in nature.
Mhm.
And then, claims has been interesting because with COVID, we had PPP and ERTC funds that went out to businesses. And so that was super unique, right? Because you had businesses that were operating, right, making their profits. There was some shutdown in construction for a time, but there really wasn't a lot. So most contractors did well, even though COVID was going on. And then on top of that, you had these funds coming in from the government, just free money. And so for like a 1-2 year period, we saw what I assume was the lowest losses in the history of the industry because these companies got sometimes millions of dollars injected into them. And so you had that period of time where the contractors that would have failed if they hadn't gotten the free money but didn't, but now we're sitting here 3 years later and that money is mostly gone, right? It's either been used or spent or distributed. And so we're starting to see an adjustment. And what's interesting is that the number of claims is still fairly low, but the dollars is higher than ever. And so we're in this really unique environment where the frequency is very low, but the severity is extremely high. And so it is a little unique from an underwriting standpoint where you're saying, okay, if I do have a contractor who ends up out of business and I have surety claims, if I wrote him a $10 million bond, just for an example, there's a really good chance that I end up paying out, 8 to 10 million. Whatever the penal sum is, there's a really good chance you pay out the full thing, even if he gets some portion of the project done. So it's unique. We're seeing less right now that end up there, but when they do, it's so much worse than it's been in the past. And then with rate, I would say it's kind of similar to capacity. The people that listen to this that are experienced working with sureties will understand this. One nice thing about surety is your rate will virtually never go up, unlike insurance. You're not gonna, we don't go through a renewal process. So we don't come to our clients and say, hey, I know last year it was $10, this year it's going to be 11 or it's going to be 12. Then the other side of that, though, is usually the rate reductions are a little fewer and farther between. So we're not going to raise it on them ever, really, but it's going to take a little more work to get it reduced. But there are some carriers, especially who are lower down and don't have a lot of market share. And that's one of the tools they're trying to use to compete is offering extremely low rates.
Yeah. Yeah, it's the market tough. Yeah. I have a friend who does some trading and he likes to write naked calls. He said like it's it's I'm not gonna lose too much money in this. I'm
Yeah.
gonna easily make some premium.
Yeah.
It's tough, when you don't understand the kind of position, sometimes the severity can be extreme, even if it's a
Yeah.
low probability event.
Exactly. Which it's always been a low frequency, high severity, but it's never been this exaggerated. it's almost, frequency, severity, it's always been like that, but it's almost gone like this now where the frequency is dropped, but the severity is, so it's really interesting when you're underwriting, right? Because it's, if it hits, it's going to hit and it's really going to hurt. And so that's what you're trying to work through is, okay, how do I feel about this contractor? Because if we get tagged, we're really going to get tagged.
Some companies don't have a perfect balance sheet. What can a contractor do to earn surety support even when the financials aren't ideal?
So the nice thing about surety underwriting at a very high level is you can just remember the 3 C's, which I think this is fairly similar to banking, except I think they have 5 C's instead of 3 because they have collateral. We don't. But you just got to remember character, capacity, and capital. Those are ultimately every discussion your surety underwriter has with you is going to fall into one of those 3 categories. And so really what we're saying, if your balance sheet is impaired for some reason or just doesn't look great for a time, one of the three C's, it doesn't look good. So then really what your underwriter is going to do is they're going to lean really hard on the other two, your capacity to perform and your character. And so what I would say is what you really need to do is just show to the contractor, or excuse me, you as the contractor, show to the surety the ability you have to perform, to show them that you have a well thought out business plan. You can achieve a solid operating margin. You can have positive cash flow, because if you're doing that in time, the balance sheet will improve. Don't go in and show a forecast that looks like it was made by a private equity firm as far as the aggressiveness. Those are what we don't like to see, because I look at that and I say, you're probably not going to do that. That's extremely ambitious. But if I go into a meeting with a contractor and I can see like, hey, I can see from your past experience, like this is very realistic. I can see you achieving these results. And if you do, hey, 2 or 3 years from now, your balance sheet is really going to look a lot better. Then I can rely on that for a time until the balance sheet does look better. So you've really just got to make sure to focus on those, like, hey, our capital doesn't look great right now, but here's how we're going to succeed now. Here's how we're going to succeed next year and moving into the future, and just really kind of show yourself off and
Yeah, yeah.
show how those aspects of the business de-risk some of the capital issues that you're seeing.
Many contractors want to pursue stretch jobs beyond their current bonding limits. What does it take to get underwriters comfortable approving those bigger opportunities?
So I think project selection is a big one here. And I'll also say, this is a relationship business, right? That's one of the big differences that I should have highlighted earlier between insurance and surety is, insurance, everyone goes out to bid every year, right? Like you get quotes from every carrier out there. Who's got the lowest price for the highest limits? Okay, you're my carrier. A lot of our clients, I should maybe say most of our clients have been our clients for over 10 years. And we've got ones that are 40, 50, 60. I think we've even got a couple that are like 100-year clients. And that's where that relationship really is a big deal. And why I would always encourage a contractor to put the time in to build a relationship, because if you're working with a surety that's known you for 30 years or even 5 years, and not only that, but if you actually know your underwriter, like you're on a first name basis with them and they know you and they trust you, that's going to go a long way. But when they come into the room, what I'm going to be listening for as you talk to me about this project is just why does it make sense? Why is this the project you want to stretch for? And I think what's hard is, and what we don't want to hear is just that it's a big number. Like, hey, we really like that. We think it's cool that this is a $40 million project and we've only ever done a 15 or a 10. There's got to be a compelling reason beyond just the big dollar number. It's got to make business sense. And if it does, and I can see that you yourself have kind of pre-qualified the project and you're interested in it for a reason, and there's business reasons behind why you're going to be successful, then we can definitely get behind it and support it.
From your seat, what are the habits or behaviors you consistently see in the strongest, most successful contractors?
So some of this I've probably said already. I'll go back to the buzzwords again. Business plan, having a strategic business plan, knowing what you're good at and what you're not good at. The other thing I'll say is the contractors that have really honed in their skills on the business side of the operation and not just the operational construction side are the ones that I've really seen be extremely successful. There are some contractors I've worked with that either I can tell or they've just told me that the financial statement and the WIP is something that they produce for me, and it's not something that they necessarily regularly review themselves, which is, in my experience, not a great sign that they're going to be like a strong performer. Whereas those ones that are the most successful contractors, they've got a timely balance sheet, financial statement, and work in progress report that they're reviewing for themselves, and they're checking in daily and weekly on it, and they know how accurate it is, and they know exactly where the business is at. And that's one of the things that I've seen has made the biggest difference. Whereas there's a lot of people that have come up through the field, they're excellent construction operators, but they don't necessarily see the business side as their strength. And instead of learning it and leaning into it, they kind of say, oh, hey, I've got this person over here. They take care of the financials. And that in my experience doesn't always go as well as the people that have said, hey, I'm going to figure this out. I'm going to ask questions. I'm going to talk to my broker. I'm going to talk to my underwriter, and I'm going to really learn and better understand how the financials work, how the business side of the operation works. And those are the people I've seen that are the most profitable and most successful.
The next section here, Jacob's on risk, mistakes, and relationship management. Again, the continuation of the last question. On the other side, what are the biggest mistakes contractors make in how they manage their bonding relationship or present themselves to underwriting?
I think a couple things come to mind. One is just not prioritizing the relationship, which ideally contractors are working with a broker that's helping them prioritize the relationship. If you're hearing this and you think you're working with a broker who isn't, pick up the phone and give them a call and say, hey, I want to meet with my surety more regularly. I want to know them better. I want them to know me better. And then also just, when you're in those settings and interacting with contractors, and some of this is personality, right? But there are some contractors I meet with that are pretty closed off, and, ask a question or you bring up a topic and you get one or two word answers or yes or no, and it doesn't really allow you to dive in and understand the situation. And then you've got some that you ask a question and they go for 10 minutes, or there's something I'm wondering about and they bring it up before I even do. And when you have a kind of a vibrant relationship like that, that's where you really begin to trust and to know each other. And, if you're a really small contractor, like I'll say maybe 10 million and below, that surety underwriter you see that comes in, he might have the authority to handle everything on his own. Otherwise, if you're any bigger than that, you might only have one underwriter in the room, but I can almost guarantee you after he leaves your meeting, he or she, they're going to turn and they're going to write notes and they're going to send it to another underwriter and they're going to make a call because there's someone else they're reporting to that's helping them on that account. And when they turn around and talk to that other underwriter, just stop and think about it. Who are they going to make the strongest recommendation for? Is it going to be the contractor they don't really know very well, don't necessarily have high trust for, or is it going to be the contractor that they're on a first name basis with, they've had strong conversations with, they really feel like they know and trust them? And from being in those conversations, it really does make a big difference, because that's who I'm going to go to bat for, is the people that I really know and I really trust. And so I would just say make the most of those opportunities, prioritize the time to get your underwriter in at a minimum once a year, maybe even twice a year, and be willing to be open. The other thing I'll add to that is there are certain clients I've met with that I almost think are afraid to present themselves as not knowing everything or not being a perfect contractor. But what I try to tell people is the secret's out. I already know you're not a perfect contractor. I already know you don't know everything, because we work with a broad range of companies, right? And so what isn't important, it's not important that you're perfect. It's really just important that you know your strengths, you know your weaknesses, and that you're working on improving the things that you want to be better. Frankly, we can be an opportunity just based on where we sit. We work with all kinds of sizes and types of contractors, and we've seen what works and what doesn't. And so I would say too, we're a good audience. If you have something you want to improve, say, hey, this came up this year, or this didn't go how I wanted it to go. This is what we're thinking. Do you guys have any thoughts? And use your time with your underwriter as an opportunity to gain some knowledge or some wisdom that you might not have thought before. And that's not going to That's not going to lower you in our eyes. If anything, for me, I think more highly of the people that do that, that are willing to ask those questions. For one reason, just because now I know, okay, he's thinking about it or she's thinking about it because we talked about it and I know they're working on it. And so that, I think some people, they get afraid, like, oh, I don't want to ask a question in front of my underwriter. I don't want them to think I don't know about this or I don't know about that. I don't know what I'm doing. But we know you have questions. We know you have things that aren't where you want them to be. So just be willing to invest in the relationship and have those conversations.
Yeah, trust is so important. Construction, actually, the entire ecosystem runs on trust.
It does.
You've worked your way up inside Travelers from the UPDP program to associate account executive to now account executive. What has that progression taught you about how contractors should communicate with underwriters?
So I would kind of just probably a lot of what I honestly just said is relationship wise. When you're a new underwriter starting out, this is a unique business. So we tell people it takes at least a year from the time someone starts before they're like really able to start meaningfully contributing. That first year is a lot of learning and training. And so for me, sitting back that first year, I still remember seeing the more senior underwriters and my bosses and seeing their interactions with different contractors and getting to go to meetings and not necessarily participating. I was just the guy in the corner taking notes and just kind of watching and observing. And it goes back to what I said before. I saw those senior underwriters and my bosses, I saw them really go to bat and stretch themselves for certain clients. And I saw others where they were like, hey, I don't know if this makes sense. And one of the big differences there with that delta was the contractors who had invested into the relationship, who took it seriously, who made the time for it, who communicated well, who asked questions. I mean, those were the ones that they had the strongest ties with. Those are the ones now I have the strongest ties with. And those are the ones that it's like, hey, I'm going to find a way to get this done. I believe in this company. I believe in this group of people, this ownership group. I trust them, and we're going to find a way to approve this, whatever it is, an increased program, a stretch project, whatever's going on. We're going to find a way to get it done because we believe in them. But the people that haven't put in that work and you don't have a strong relationship with it, it's a lot easier to just say like, hey, sorry, we don't feel comfortable doing that. We don't want to do that.
Important is the relationship between the contractor, the surety agent, and the underwriter. What does good communication look like in practice?
So yeah, they all kind of have their own ecosystem, the contractor to the broker and the broker to the surety. And I mean, ideally, I hope that, the contractor and the broker are communicating frequently and openly, and the contractor is willing to share with the broker what's going on, what their needs are going to be, what they could use help with. I mean, we as the surety, we love to be part of those conversations as well. But and if they are happening, hopefully the broker sharing it with us. But I would just say, just make sure you keep open lines of communication. I mean, another thing with, I guess we'll go back to stretches again. Sometimes those requests come in like the day before a bid or 2 days before a bid. That's a lot harder, Rishi. You get an email like, hey, this bid's in 24 hours. Can we do this? It's 4 times bigger than any project we've ever done. And it's like, hey, let's look at this. But man, this takes some time. It's really hard to in 24 hours get an answer to a question like that. And then there's times, contractors I've worked with that they're like, hey, there's this project. We know it's big. It doesn't bid for 2 months. Let's talk about it. And I would say when you have like that kind of a timeline, your odds of getting supported and getting approved are significantly higher. So I would just say maintain open lines of communication with your broker and with your underwriter and keep in touch with them, because even just being a little more timely with your communication and your request can go a long.
So the contractors have to have the surety bond before they actually bid on some
Most of the
projects.
time, yeah. So if it's a public works project, it's often hard bid. And so with that, they're gonna have their bid documents and then they're gonna have a bid bond attached and they've got to turn that in. And if they turn their bid in and then the agency goes through and they don't see the bid bond, then the bid's gonna be tossed out. There are some times that particularly on private work where the bonding isn't required. An owner might do a request for proposals, or they might do a hard bid request and then choose their contractor, and then after that fact say, hey, we want performance and payment bonds even though we didn't ask for a bid bond. But yeah, typically the bid bond is going to be needed on the day of the bid.
Makes sense. The next section here is on financial discipline, WIP, and reporting. Many contractors underestimate the importance of accounting. From an underwriting perspective, how critical are WIP schedules and timely financial statements?
Yeah, so I mean they're super critical, right? What I say for me is the work in progress, the balance sheet and the income statement, that's the pulse of the company, right? I'm looking at those three together. And with that though, the timeliness aspect of it is super important, right? Because let's see, it's December 10th today. If somebody sends me an April 30th statement right now, it's not necessarily worth a lot, right? Because I'm like, well, it looks good, but that was 8 months ago, and things change quickly in this business. So they're super important. It's critical that they're timely. And just the other thing I always say to that is like, man, I hope those are as important to you as they are to me. Because like I mentioned earlier, the contractors that are the most successful, they're looking at those things before I am. And the ones that I've seen that aren't always as successful, when I ask for a WIP or a financial statement, they have to scramble to pull it together because they don't have a recent accurate one that they've been using and reviewing. And so, I mean that's your pulse. That's how you really know how your company is doing, and making sure those are as accurate as you can and as timely as you can. That's the only way you can really track yourself and try to make improvements. And that's what I need to see, like, hey, how is this company really performing?
Some of these contractors may only be looking at the bank statement. They're like, okay, why do I care about any other thing? If my
Yeah,
bank statement is going up and down, it's telling
exactly.
me the pulse of the business. Is it?
Exactly. Which I always say, I always ask the question when that comes up. I say, well, how much of that cash is actually yours? And some people can give a really good answer to that, and they can say, well, there's this much in the bank, this much is mine. And then there's some that I think get more stuck on the dollar. Hey, there's $3 million in the bank. Yeah, but in a month or in 2 months, how much is there going to be after you've paid your subs, your suppliers, your employees? If you have a bank line to pay down, you got to stop and really. And that's where the financial statements come in, because with the financial statement, you see more of a full picture instead of just saying, oh, look, there's $1 million in the bank. You say, oh, there's $1 million in the bank, but I've only got $250,000 of working capital. And that's a big difference.
Yeah. What do you see contractors getting wrong about WIP reporting, over and underbillings, and job cost tracking? And how does that affect bonding?
So yeah, so I mean, WIP reporting is super important, right? Because that's in construction businesses, they're not retail businesses, right? They don't manufacture and then sell an item. So that, I mean, that is the product. The WIP is showing the product, and it's showing us how profitable it is, right? And of course, it's estimates. It's all estimates. The accuracy of the WIP all comes down to the estimated cost to complete, right? And so that's where I'd say that. That number is super important. And of course, there's some fudging in there on every project. We don't know exactly where it's going to end at. But ultimately, I want to work with contractors who have a reasonably good idea of like, hey, this is about where the project's going to finish. This is my estimated cost to complete. The revenue amount is fixed. You sign a contract, so you say, okay, we're going to get paid this much. So that estimated cost to complete the project, I mean, that's critical. If you make a significant error with that number, then every other piece of information for that project on the WIP is going to be wrong. And we're just looking at bad data. And then over and under billings, I mean, those are critical as well. The one thing I'll say is the best operators I work with, especially in the trades and in heavy civil construction, they're very good at getting overbilled. And that just puts them, as long as it's managed well, the one plug I'll say with that is, if you send me a financial statement and your overbillings are here and your cash is here, I might have some questions. High overbillings should equal high cash, right? Those should be correlated to each other. But when we do see that, when we see high overbillings, high cash, and when you have a track record I can look back on of years of work in progress reports, we we kind of get to understand the behavior of a contractor. And like, okay, they get out, they get overbilled. That's how the project goes. And those are the people that, the key difference with the under and the overbilling, right, is what I always tell people is if you're underbilled, you just gave an interest-free loan to the owner of the project or to the contractor above you. If you're a subcontractor, you're giving the GC an interest-free loan. If you're the GC, like, hey, you just gave an interest-free loan to the owner, which don't do that, right? They're the one, this is their project, this is their product, they're paying you, they're financing it, you're not financing it. So, there are some contractors that operate in unique segments of the market, and the way they operate leads to underbillings, and they're legitimate and they collect and it's fine. But generally, I'm just not a fan of underbillings for that reason. And I say, hey, the best thing for you is get out, get in front of it, get overbilled. And then as soon as you're overbilled, make sure you manage that well, right? Don't get overbilled and then distribute all the cash and go and do, buy a boat or a mansion or whatever you might do with it. Make sure high overbillings equals high cash. And if you do that, then you've put yourself in a position where your cash flow is strong, your company is protected, and the owner is actually financing the project.
Very good point. The next section and the last section is on technology, AI, and modern contractor development. Construction is adopting AI faster than ever. Where do you see practical ways contractors could apply automation or AI today to make their businesses more fundable?
So there's a couple things I thought of with this. One of the big ones I would point out is contract review. Anyone who is on this call that has seen construction contracts know they're getting longer and longer and longer. Those mega project contracts have always been long, 1,000 pages, 1,500 pages. But what I'm seeing is we're getting to where even the small projects are like that. And in the past, that was very labor intensive. If you think about it, to do like a thorough review of a 1,000 page contract. It's terrible, and no one enjoys it, frankly, right? It's like watching paint dry. There's nothing I would rather do less than just sit and read through a 1,000 page construction contract. And so with that, I think there's people that, maybe there's certain sections they focused on, but I just think things have gotten missed historically. And I think most companies have not performed thorough reviews of their contracts. And I think that's one of the coolest things with AI now is there's software out there where you can say, because the other thing I'll say is don't take your contract and just drop it in Chat GPT, like public database. That's a terrible idea because you're taking private data and you're putting it in a public database. But there's proprietary software out there where you can safely put your information in. There's software I know that's specifically trained for contract review, and you can train it as well what to look out for. And as we know, AI isn't perfect, so you still need to double check the work. But man, I just think there's very significant labor, time, and cost savings with that. And you can actually approach your contract negotiation knowing like, hey, I've actually vetted every page of this contract rather than what we did before where maybe we kind of skimmed through it, or hey, go check that section and go check that section, don't worry about the rest. And that's not a good route, especially anymore. There's more and more hazardous terms being hidden in contracts. So for subcontractors, flow down provisions are getting worse than ever. And so that's one big one I think of. And then another one I think is shameless plug for you guys, Rishi, is just using AI just to cut down on time for tedious tasks. And my kind of personal experience with this is just I've got some family in construction, and one of my family members was one of the people that's had to do some of the very manual, very tedious tasks, with payroll and payables and receivables. And so I'm aware of the amount of time drain that is. And I'd say anything you can do to save time and ultimately save money there, because if you're saving time, you're saving money. If you've got an employee that they used to spend 8 hours doing something and now they spend 30 minutes doing it, then there's a significant cost savings for you there. And hopefully that means there's more cash in the company and your surety underwriters happier.
Yeah, yeah. Some of the back office people are spending still a lot of time just entering data and
Yeah.
validating,
It
tedious
really
stuff.
does. It really does take a ton of time. There's companies, there's people, that's all they do. I mean, that's their entire role is data entry, verification. And when you stop and think about that, we think about how much a person's being paid and their benefits. And it's like that company, they're paying a lot of money to get that done. And if there was a way they could automate that and significantly cut down the time and let that person do something that's more valuable to the company instead of just doing verification, then it's well worth it.
Yeah. We are in the construction accounts payable automation business. This is a seamless plug.
Yeah. Check it out.
Yeah. Check it out. Last question here for you, Jacob, is you've been part of the construction world from multiple angles: field labor, project management, consulting, and now surety. Based on everything you've seen, what advice would you give a contractor who wants to grow safely over the next 5 years?
I think the couple really high level things I'd say is one is remember to approach your business as a business. When you're a construction company owner, I think it can be easy to just get focused on the projects and executing the projects. But you've got to make sure that you're looking at through a lens of the projects are how we make profit, and profit is how the company thrives. And so kind of in line with that, I always tell contractors there's two things that I don't care at all about, frankly, and that's revenue and gross profit. I just don't care about those. To me, the thing that matters is operating margin, operating profit. At the end of the day, it doesn't matter how much work you did. It doesn't matter how much gross profit you did. It just matters how much actually was left in the business at the end of the day. I have worked with contractors that have done this much revenue and contractors that have done this much. And sometimes this guy down here makes 3 times as much money as this guy down that's up here. And, those contractors that are doing way more revenue, it's more stress, it's more work. And at the end of the day, they're making less profit. And that's not me saying don't be a big contractor. The point I make there is make sure you're getting paid, make sure you're paying yourself, and don't worry about revenue. Revenue doesn't matter. Operating margin is what matters. So focus on your construction entity, not as just a group of people doing projects, but as a business that's there to make money. Focus on operating margin, build your business plan around that, figure out what you're good at, where you make money, where you excel, and stick to that. And don't be afraid to turn opportunities down. And, if you want to grow, if you operate that way, you do excellent on your projects, you make a strong profit, your business is going to thrive and you're going to grow. The only thing that'll stop you from growing is you saying, hey, we're good. This is the size we want to be. We don't want to grow anymore. We're going to stay here. But otherwise, if you operate your business like that, you focus on making a strong profit, retaining a portion of those earnings to help the company's balance sheet grow, to help you have the cash to grow. You perform well on your projects. The growth is going to come with time. So you don't worry about rushing it. There are some contractors I'm around that have very, very ambitious goals surrounding growth and revenue increases. And I'm not saying that's inherently wrong, but I'll say the growth will come with time. And just make sure in the meantime that you're getting paid and you're making money. This is a very, very, very hard business, very high risk, very stressful. You work a lot of hours. So make sure you get paid for it. Make sure you're getting rewarded for that.
That was a fantastic advice. Thank you so much, Jacob, for being on the show. I had a great conversation with you.
Thanks. You as well, Rishi.
Thanks for listening to Finance at the Job Site. If you found today's conversation valuable, share it with a teammate and subscribe so you don't miss the next episode. You can listen on Apple Podcasts or Spotify or watch on YouTube. Just search Finance at the Job Site. Until next time, here is to building smarter, faster, and more profitable projects.